Hey everyone, my name's Andy. I'm from Finding Value Finance. I'll be your host today. We've got Tom with us. Wanted to bring him on, so thanks for coming on and sharing some your time with us. So,
Oh, thank you.
since you're new to the channel, usually what I'll ask is tell me a little bit about yourself, a little bit about your background, and kind of what you do.
Sure. Well, I'm Tom Luongo. I'm the proprietor, well, mostly of, I run goldgoatsandguns.com and the financial blog, the newsletter, and the podcast. I also work for Newsmax, writing Ultimate Wealth Report for them over in their newsletter division. I've been working with them on and off for about a decade now. But my background before that was, I was a bench and research chemist for a long, long time. So Um, I'm a data guy when it comes to certain things. I'm a data guy. And for in other respects, I'm a high level strategist kind of guy. And so I'll shift focus whenever I need to, depending on how I need to construct an argument. I'm capable of doing both at the same time. So that's kind of I try to occupy that space between finance and geopolitics and see where they meet and explode and all the rest of it. And then if I have to learn something I don't know, well, then I go out and learn it. In the last 2 years, it's been bonds because I didn't know a damn thing about bonds 2 years ago. So today, I only think I know something about bonds. So we'll go from there.
So what are you seeing in the financial markets today? You can talk about bonds, we can talk about yields. It's open and whatever you'd like to discuss. But
Mhm.
what are you seeing today, whether good or bad?
Well, what I see today is no different than what I see every day. And since my friend and mentor Jim Sinclair just passed away over the weekend, I'm reminded all the time when I watch these people operate in the public space. It doesn't matter if we're talking the media, we're talking Janet Yellen at Treasury, we're talking Christine Lagarde over at the ECB. They all believe in management of perspective economics, or MOPE, as Jim liked to call it. And I want to just invoke Jim here today because I think it's really important to remember that that's what we have to do. We have to spend all of our time in this exhausting manner trying to figure out what it is that these people are doing. And most of it is ad hoc, post Proctor Hawk stuff, trying to just like, well, the system's melting down and we're just trying to, fake it until we make it and hope that we can keep everything keep everything together for another day, another week, another month, or whatever. So every day when I wake up and I look at what the markets are doing, and I see the euro rallying into the New York Open, and then the New York Open happens, and the euro starts getting crushed, or bond spread starts tightening, or gold starts breaking out, or something happens. I always see the same thing, which is that it's a bunch of children running around like the little Dutch boy trying to stick their fingers in the holes in the dam, and another leak always springs up, and then they got to run over there, and then they're hoping that today they can keep that leak under control long enough to then manage this leak, and then figure out how to put some gorilla tape or something else on the other leak, and then hold everything back for a little while. This is the financial world we live in today. This is the political world we live in today. This is the power struggle geopolitically that we're seeing today. But all of that is in service of trying to fight trends, trying to fight the primary trends of what is going on, right? And you can manipulate markets. And you're, again, taught this by all the greats, Martin Armstrong and Jim Sinclair, and everybody. We've all said the same thing. You can manipulate markets for a short amount of time, but you can manipulate them against the primary trends because the primary trends are set by all of us. No matter how much you try to manage our perspectives about what you think the markets are going to do or the politics actually are, eventually you got to pay the bills, you got to balance the balance sheet, right? And someone is going to call bullshit, pardon my French, on whatever it is that you're doing. And coming into October, I said, coming in October, I kept saying for most of the summer, various interviews and whatnot that I did, I said, we're getting really close to the end of this idea that there are no bond vigilantes, that the central banks are all powerful and keep keep punishing the bond vigilantes for trying to call their bluff about what yields, what sovereign debt yields should actually look like, what the prices on sovereign debt should look like. And at some point, the bond vigilantes are going to return. And the reason I thought that is because I fundamentally believe, having watched him do this now for 2.5 years, that Jerome Powell is the original bond vigilante. He's the at the as the chairman of the Federal Reserve, he's saying to the rest of the central banks, I dare you to pop our Ponzi scheme that is the Fed. We're the biggest Ponzi scheme. We're going to pop you. Mind blown. Everybody like sits back and goes, but I thought you couldn't taper a Ponzi scheme. Well, I say you can taper a Ponzi scheme if you're the biggest Ponzi scheme. And if you don't believe me, think about how the order in which all of the crypto Ponzi schemes in like Terra Luna and Binance Coin and they all got rolled up into FTX, and then eventually the Fed executed FTX in my worldview. And if you don't think that the Fed executed FTX, I have to ask you the question: then who did? And who would have been big enough to do so, right? But that's another discussion for another day. So what do I see today, October 23rd, Monday morning? I see the same stuff that I saw on Friday, October 20th. The ECB desperately trying to hang on to the current pricing regime of sovereign debt across markets while trying to defend the euro from rising oil prices, rising commodity prices as much as possible, hoping that they can break market psychology through exhaustion, honestly, to keep oil prices under control, copper prices under control, gasoline prices under control, and all the rest of it. Because the last thing they want to see is a return to inflation as measured by the CPI in the United States, because if that happens, Jerome Powell goes on the warpath again, and as the ultimate bond vigilante, raises interest rates again, which I expect him to do either at this meeting or the next one. I think we're going to not get a raise this month, but December's meeting, I don't see how he doesn't raise rates given the situation with $92 a barrel oil, and and the Biden administration running out of barrels of oil to release from the SPR to bomb the gasoline markets. Just don't see it. So that's where I see it today, and that's like the big broad stroke. But just to remind everybody, since if you're a subscriber to the channel and you've never heard me before, this is where I live. I live at that intersection between reality and fantasy, and the management perspective, and what happens when reality reasserts itself. And there's a whole lot of people that just haven't quite grokked to the idea that reality is capable of reasserting itself. And I think that's going to be a very painful and expensive lesson for a lot of people who are holding on to the old, omnipotent central bank model that's in their head, because that model's gone. They're all scrambling around like 18-year-olds at the prom trying to figure out whose boob they can grab first before while they're out on the dance floor, because that's what's actually happening. So
It's a fun time though.
it is a fun time, but it's not particularly fun if you're an investor.
So where do you think rates are going to go looking out? I heard, potential rate hike. And what are the impacts of those rates going, if you think they're going to go up, what are the impacts of those rates going up, in your opinion?
Well, the thing is that, I've been on record as saying that I think Powell is going to go as high as he can for as long as he can. And that originally I said he's going to go to 6%. Beginning of the year, I said I think he might have to go to 7% if inflation doesn't moderate. And if he really needs to break the back of the offshore dollar markets, the euro dollar markets, I think he's done that successfully. So he doesn't. So I'm going to be wrong about that call about going to 7, but I certainly think that he wants to go to 6 because he wants to be able to have the room to cut back to 4.5 and get rates normalized from a historical perspective. I think that's Powell's ultimate goal here. If he can get that done by 2026, and there's that forces enough of a political revolution on Capitol Hill that the Fed is not then stabbed behind him with a whole bunch of MMTers and communists, frankly. They've already done a wonderful job of surrounding him with some, but there are other appointments to the Federal Reserve Board that we can mitigate that. The Federal Reserve Chairman, if we get another one like Powell in 2026, then we can actually continue the process that he started. He can't finish the process unless he wants to go for a third term. Okay. It's going to take longer than until 2026 for him to get the job done. But having done what he's done so far, the clear strategy at this point is for them to run the clock out on his second term as Fed chair. and postpone, you know, the great commie takeover of the United States until 2026. So that's why the election is going to be a very interesting problem, because that's why the election is so 2024 is going to be so bitterly fought. So what do I see going for rates is that I see Powell going to 6 over the course of the next 4 or 5 meetings. He'll slow the pace down a raise every other meeting or every third meeting until he gets to where he needs to go. QT, as Daniel DiMartino Booth keeps pointing out in every interview she does, ticking away in the background is like even more rate hikes. As long as he keeps shrinking the balance sheet and shrinking liquidity, and as long as there's still a positive balance, I think, on the reverse repo facility balance sheet, which is, I think, still right around $1 trillion. It's draining fast, but that could stop any time now, and then we'd be stuck at $1 trillion. I think as long as he's got money on both sides of the balance sheet, the collateral in the form of treasuries and liquidity to allow the markets to pull out of basically savings and dump it into the money markets, to keep the plumbing liquid. Now I think he keeps rates as high as he can for as long as he can, so he can shrink the Fed's balance sheet, so he can keep putting downward pressure on credit asset based prices, so real estate, mortgages, and all the rest of it. You have to see it from that perspective. What he's trying to do is destroy not only the Fed put under the market, returning capital markets to the capital markets, but also to do away with this idea that we can have, we can have infinite cheeseburgers, right? To use the old cat names, right? Think of it that way. Like, we can have infinite money at, and that we're never going back to the zero bound. We're never going back to QE. We're never going back to, this monetary experiment that divorces all that, basically divorces all risk from those who are borrowing the money. And that's insane. And then putting the cost of that risk on the back of the taxpayers, which is ultimately what MMT is, right? So that's where we are there. This is also why they're trying to, gin up a wider war in the Middle East, because they need to have a cover story for when the system crashes, like they have, like when the system was crashing in 2020, and then we got COVID. And there's some multiple ways to look at those things, how they're trying to stop Powell from doing what he needs to do, because they're all screaming out there. No, Powell's got to pivot. Elizabeth Warren, who sets banking policy and bank policy in Congress, is screaming that the Federal Reserve Chairman needs to be removed from power and that the Fed needs to be subsumed back into the Treasury. Oh, like hasn't always been the long-term goal, right? That if the Fed ever decided to act independently of the quote-unquote globalist oligarchy of the old colonial empires, then, well, we'll just take it back into the Treasury because we own the Treasury. And that's what they do. The globalists own the Treasury in the form of Janet Yellen. That's why they put Yellen in charge. So, that's why the 2024 election really will determine, I think, the future of the United States. That's a broad way of putting it. So you want Powell to keep interest rates as high for as long as possible, because it breaks and continues to force a liquidation of so many levered assets, and forces the wrong people to spend all of their blood and treasure, the bad guys to spend all of their blood and treasure defending credit spreads right now, defending interest rates. That's the goal. Eventually, if you make them spend all their money defending this, eventually the dam breaks and we win, and the world wins. Okay, because if they win, then that means Russia, China, Iran, the rest of the global South has to then remonetize gold as a reserve and trade settlement, and then the whole West collapses, including the United States, because they have more gold than we do. They will monetize it. They don't need it. Their balance sheets are cleaner. they could actually undergird a new bond, entirely new, going back to an old way of having bond convertibility to gold, which they will do because that's their ultimate weapon. And Reuters just published an article the other day talking about China potentially invading Taiwan, but buried in that article was the China's ultimate weapon is that they do exactly what I've been saying in multiple I've been saying for over a year now, riffing off of Judy Shelton's original idea that the U.S. should issue 50-year bonds backed by a 5% gold redemption clause in order to, fix the fiscal problem on Capitol Hill. Well, guess what? If we don't do it, China will, or the Russians. The Russians are sitting at 25 or 28% of debt to GDP. They have all the balance sheet in the room in the world to sell a couple of $1 trillion worth of gold redeemable bonds to finance whatever it is that they want to do for a country of 150 million people. Like, it's insane how much balance sheet room the Russians have. If you stop to think of it in those terms, we have zero. We have less than zero. We have negative $33 trillion worth. So
Here's a question.
hmm.
I mean, isn't Powell just reacting to inflation with his interest rates? And isn't this kind of somewhat planned maybe by Russia and China and all that stuff, where they printed a bunch of money, they don't want to accept, worthless dollars for the resources that they provide. Isn't
Right.
Powell just reacting to this whole mix by raising rates to
Well,
basically install,
he is in some respect, but
yeah.
what he's saying is, I have to soak up all those treasuries that the rest of the world is trying to, that the rest of the world no longer wants to buy. I have to put facilities and processes and and basically think of them as heat sinks. I have to install monetary heat sinks all through the American economy to put a bid under treasuries so that I can manage the yield curve rise in such a way that it's not disruptive and that we don't wind up with a whole cascading series of margin calls. Like, we can have a series of margin calls as long as they're, slow. And we're going to have a couple of bank failures here and a couple of bank failures there. And, some private equity guys will go broke, and, some commercial real estate will change hands and blah, 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 and sell off for 40 cents on the dollar or whatever. Fine. That's all manageable. What you can't have is Lehman Brothers or Lehman Brothers times 10, which is what happens if rates go from 5% on the 10-year to 9% on the 10-year in a month, right? That could happen. China could dump $800 billion onto the market, right? The whole world, if the dollar rises too quickly, then a lot of people will do exactly that, if for nothing else than to defend their own currencies. But Powell you could argue that he's responding to inflation, but again, go back to, and I said this before the pandemic, I said, Powell's going to have to raise interest rates at some point, and inflation is going to return, and we're going to have a credit crisis, but we'll have a cost push inflation credit crisis. Well, it won't be a demand pull that's going to cause rates to rise. Right? It's not going to be demand pull inflation. It's going to be cost push inflation. It's going to be supply chains disrupted and commodities not being available that will cause the bid on commodities to rise. So we'll have commodity price inflation, which is the only real form of inflation that anybody gives a shit about. And then, so it won't be a demand pull because the demand for money isn't rising. Demand for commodities is rising, which is then forcing secondarily. So you don't fight a commodity cost push inflation with interest rates. You don't. You don't. What you do is you ride out cost push inflation with interest rates that the maximum interest rate your credit markets can bear, which previous to Powell raising interest rates, everybody thought was 1%. Why? Because the European banks were the ones setting that limit, not the American banks, through LIBOR. We're not on LIBOR anymore. We're on SOFR. Clearly, we can afford 5.5% in the United States. Can everybody else? No, which is why they're screaming. And the Eurodollar markets are being drained of all of their leverage and all of all of um, their liquidity. If you want to, if you want the smoking gun of this, it's really simple. And I've published this before. I've talked about it before, and I'm going to write a blog post later in the week going over this in more detail. But the smoking gun is in the Treasury International Capital Report, which I break down by region. I've been breaking it down by region to see if the data would support the thesis. The idea was, well, as they're selling out, as Japan is selling treasuries to defend the yen and to blunt the rise of the fall of the yen, the rise of the yen versus the in numeric terms, because we use the inverse. And the Chinese are selling treasury bonds to lessen their political risk of war with the United States, right? Asia Pacific as a region has sold a tremendous number of U.S. treasuries, and my ducks agree with me, unfortunately. Shut up, girls. Thank you. Trying to talk here. Oh my God, I'm sorry, really sorry about that. But
I can barely hear him.
Okay, good, because they're right in my ear. I can hear everything. So, as Japan and China have been selling, guess who's been buying? The Eurozone's been buying. The Bank of England, the Bank of France, to a lesser extent Germany, Belgium, which is where Euroclear is. Luxembourg has bought Luxembourg's bought almost $100 billion worth of friggin' treasuries. Oh, by the way, I just found this out over the weekend. In the summary report of the TIC report of the central banks, foreign central banks and their holdings, on that top 30 list that they've always published, they never included the British Virgin Islands, even though that balance is above other people on the list. I wonder why. Because it's been all the British offshore tax havens and banking havens, the Caymans, Bermuda, Bahamas, all this stuff. That's where all the money's been going. There's been unbelievable amounts of buying to the tune of over $500 billion in the last 2 years, $200 billion of which has occurred since the debt ceiling crisis was resolved back in June. They've been on a massive tear. The BOE's bought us $100 billion worth of treasuries in the last 3 months, 4 months. We only have the August data. They're literally buying U.S. treasuries to keep yields under control. The Eurozone, if you break the TIC report down by the Eurozone, Asia Pacific, and the rest of the world, it's very clear. And you exclude Switzerland from Europe, because Switzerland's its own thing, because it's not EU specific. It's not British Empire specific, right? The Swiss are still mostly neutral. If anything, the Swiss National Bank is, in the grand strategic sense, is more aligned with the Fed in this fight, along with the BOJ, the Bank of Japan, than it would be with the ECB or the Bank of England. So you start thinking about this as a fight between central banks for whose bad currency is going to reign supreme after the whole system collapses. Then clearly what's going on here is that in order to defend credit spreads between European and American debt, as Powell's raising rates, Europe is buying tons of treasuries to hold yields, to hold U.S. yields under control, and to continue the fiction that German debt is properly priced at 2% less than American debt of similar maturity. Now, does anybody believe that at 8% CPI, German industrial production falling off at 10, 11% per annum, with real, honest to God, political unrest happening in Germany, where you're seeing the rise of the AfD and the fall of the ruling coalition in Germany is polling at 33%. You think Joe Biden's numbers are bad? Like, all that has to happen is for somebody to just finally put the right manila envelope on Christian Lindner's desk, who's the head of the FDP, the Free Democrats that keep the coalition together, and go, by the way, you work for us now, because you can't pass dead hook or live boy test, right? You can't. We're gonna nuts and sluts you out of Usually it happens to anybody who's an enemy of these people. But what happens when it's not? What happens when you can finally put enough on the ledger on the other side to get Lindner, who's already begun talking about pulling out of the coalition in Germany? Does anybody think that if the coalition in Germany polling at 33% collapses, that German debt's going to be that people are still going to really want to buy a German 10-year at 3%? Really? Huh? Is that air you think you're breathing? Like, because it's not. So
Here's
that's the
another
way I see it.
question.
Sure.
Here's something. So the supply side of commodities, it is constrained, much like you said. You said interest rates, that basically kills demand, not really much with supply. Totally agree.
Mhm.
Isn't the supply of commodities really driving what I consider to be these currency interest rate wars, credit spreads, all that stuff? Isn't it really the driver of, or the origin of why these guys are doing this?
Mhm. Well, yeah, of course. And they need to have collateral for their system, right? And energy and commodities are the collateral that really undergird the value of any currency. I'm sorry, but you can say it's the productive capacity of the people that make up the economy, and then I go, okay, well then what's the productive capacity of the people in the economy? Their ability to get raw natural resources and turn them into value, right? Which is where I will differ from Martin Armstrong, for example, in argument. Why? Because, well, to Martin's eternal, frustration, I'm a gold guy. But I'm not just a gold guy in that respect. I'm a commodities guy in that respect. I'm not a trader, right? And I love Martin. I think he's brilliant and all that. But where like I have disagreements with everyone at certain levels, and I have great agreement with a lot of people, and I have disagreements with other people, and we should be able to openly, discuss these ideas amongst ourselves and challenge each other to be better. I get challenged by people to be better all the time. You're trying to challenge me on this particular question. So, which is exactly what you're supposed to do. You're the interview, right? So, what I would say is, um, yes, it is the role of commodities to, you know, that ultimately, and their access to them, that is the effective margin call against all these currencies in the bond markets. Well, guess what? Who doesn't have access to raw materials? The United States or Europe? Let's just start there. If it was an A or B question, who doesn't have access to raw materials?
Europe does not have access.
Bingo. So who's the weak man at the table?
Europe.
Exactly. Who's more vulnerable to a rise in interest rates?
Europe.
Who is desperate to try and keep interest rates under control to manage the perspective that they've got their economies under control, even though they have lost every geopolitical battle to secure cheap access to energy and commodities? Europe. That's where we are today. And that's why they have to desperately try and run the clock out on the Fed and have Janet Yellen and Joe Biden run interference for them on Capitol Hill. That's why the Republicans can't elect the Speaker of the House. Okay. It's why these things are all happening. Okay. This week, will we get a different speaker? Will we actually get a Speaker of the House next week? Depends on how many manila folders hit the tables of the 22 congressmen that voted against Jim Jordan. We could wind up with Byron Daniels. I got news for you. Byron Daniels is from Florida, is just as bad as Matt Gaetz. Like, I know people who are fundraising for the guy. They're all there. Half of them are my patrons. Like, I trust Byron Daniels more than I would trust Jim Jordan at this point, because he's got less time in the swamp. So, like,
Here, I'll try to make a statement, see what you think about it. The way that I view it is monetary expansion around the world, commodities are constrained. It's going to be a fight with each other now on whose currency is going to survive, so to speak. What is the ramifications of all this? I mean, they're just going to rate. I mean, America's going to raise rates. Other guys, they're going to try to raise them or try to manage whatever they can to keep their currency alive. Where does all the pressure build in this system? Are we gonna see it somewhere? Can we say
oh
the
yeah,
bond market's gonna build the pressure, then the currencies are gonna be the relief valve, and then with inflation kind of running rampant and these deficits that all these countries have that are just ludicrous, where's the pressure going to build? How's that pressure going to move through the system? Is it going to build in the bond markets, release in the currency markets, and then finally ultimately release like in precious metals markets or commodities? How
Yeah,
does that
it's
all
going to go
kind
to
of
hard. It's going
go
to,
through?
again, as Martin Armstrong puts it, we're going to have a shift from public to private assets. We're going to have a shift from intangible debt-based assets to tangible assets. Gold, goats, and guns. It's the ethos, folks. It's ultimately where we wind up, right? Um, but
And this is
also,
on
also
a
in
worldwide
midstream,
basis.
yeah, no, on a worldwide basis. I mean, and the scramble for commodities is going to keep this. So it's going to keep a bid under the price of oil. It's going to keep a bid under the price of gold. Has to. What'll blow your mind is the day when you finally realize that the only way for us to get out of this, the only way for the Fed to get out of this alive and survive this in its current form is to effectively remonetize gold. Going back to the gold covered bond argument. But you've got to get the Treasury on board with the same thing. They tried to get it done under Trump. They failed. They tried to get Judy Shelton onto the board of governors of the Federal Reserve. Kamala Harris and John McCain high-fived on the floor of the Senate to stop her nomination. Okay? Like, do you need to know anything more, folks? And that was eventually that was again one of those moments that was telling about what it is that they're actually trying to accomplish. Now, at the same time, they want to take us to war because then that way they will force, again, some big project to force the Fed to go back to the zero bound to monetize whatever debt they want they want. Every spending bill that you see out of Biden or you see out of Pelosi or whomever, when Pelosi was speaker, you see from these people, everything they do devolves down to how can we force the Fed to monetize a whole bunch of debt that the Fed doesn't want to monetize? How can we get the Fed to monetize debt again? Because that's the only way this thing survives. They tried it with Build Back Better, failed, right? Tried it with, that's why Pelosi set all three of those votes together. She had to have the single omnibus vote of Build Back Better, the infrastructure bill, and the debt ceiling increase in the fall of 2021. Why? Because she was trying to get Build Back Better through and force it through on the time schedule of the debt ceiling crisis before the CBO report could come out to say how much it was actually going to cost. They could go out there and lie their tits off that the thing was all paid for. And then we get the CBO report, and it was actually going to cost us $6.5 trillion in the first 3 years of the 10-year spending bill. It was all front-loaded spending. And Joe Manchin knew this. Kirsten Sinema knew this. Probably had somebody at the Fed telling them on Powell's team saying, "Oh, by the way, we have your back, and say no to this." Because it's the only way they survive. That's the only way the only way the fall of 2021 happens is if the Fed hadn't already begun the process of putting the political pressure necessary to stop the spending. Because Jerome Powell was forced back to the zero bound because the system broke during COVID, which they purposefully broke during COVID, in order to get him back to the zero bound, bail out his private equity friends one more time, put egg on his face, undermine his credibility, to that, which he didn't want to do that. He came in as Fed chairman to be the guy to fix the Fed. And it got delayed they extended and pretended all the way through his first term. And now we're into his second term, and he's trying to do the same thing. And now he has to do so on a compressed time schedule.
What about this outlook? We've got the supply side of commodities, and really inflation is more or less credit expansion versus the supply of commodities or your GDP, right? It's that imbalance at a very simple way of looking at it. Powell basically has to crush the demand or the credit side by raising rates, holding all this down because the supply side is limited. Put it that way. Is there any sort of, we'll call it, is there anything that's going to break when he does this? I mean, is Are we going to have fiscal problems with the government? Are we going to be
Yep.
stimulating through spending and interest payments and all that stuff? Almost like a stimulative measure from the back end. Even if he raises rates, he's kind of screwed either way. He stimulates as rates go up because the deficits grow, and he stimulates if he lowers rates because credit will expand. What's your opinions there?
Here's the thing. It all depends on where the money is going to go to, right? So you set a budget in Capitol Hill of, a $500 billion a year deficit as opposed to a $2 trillion deficit. Okay, there's net $1.5 trillion in Washington accounting. Oh, it's $1.5 trillion in spending cuts. It actually is. Okay, fine. And you also then have to spend an extra $500 billion, and that whole deficit is actually the interest on the debt you have to pay at 5.5% versus at the zero bound. And the numbers are obviously higher than that. But let's just for the sake of discussion talk about that. Where does that money go? That money goes to savers. That money goes into the economy. It goes to pay for gasoline. It goes to pay for your rent and your bills and everything else. It doesn't go to do a leveraged buyout takeover of 500 of a family farm in Nebraska, and then hand it over to a bunch of private equity vultures who then strip mine it and sell it all off. Like, this is the difference. Like, is it stimulative? Sure. But what kind of stimulus is it? Is it mainstream stimulative, or is it Wall Street stimulative? Again, and as long as you take the leverage out of the system, I don't care. The Fed is changing. We're seeing the rumor now that the Fed is looking to end the way the potential rehypothecation of treasuries pledged as collateral, or treasuries bought with rehypothecated collateral in the clearing markets, in the repo markets domestically. That's the next phase of the process. You then strip that out. So no longer can you use your mortgage to go in and get treasuries and then take those treasuries, which are now, and then rehypothecate them and pledge them as collateral against some other loan and keep levering everything up. Aside from the fact that at 5.5%, those trades don't work anymore. If you force 100% margin effectively to post collateral within these markets, does that not create a massive demand for treasuries while the rest of the world is trying to de-treasurize? And Powell's letting $95 billion a month run off the balance sheets, and but all the same things that everybody's been talking about. Commercial real estate's going to be in trouble because the credit cycle is imploding. Sure, credit, and so many of these. The question is, who's going to get crushed here? And at first blush, as of right now, the guys who are going to get crushed are the private equity guys who levered up at the zero bound under Yellen, Bernanke Yellen. And, they're going to get crushed, and private equity Powell is going to become a thing. It has become a thing of the past. That's the way it looks right now. And, we, for the first time in our monetary history, have control of the value of our own debt markets, which the City of London was controlled before that. And the Vatican, from what I understand now that I start going down that rabbit hole, now I realize that, they're like, we're reversing all of this stuff. Like, all of these bits of shadow relationships that, were foisted upon us and forced on us by, ages ago. And that we sit here and we wonder, why does the United States act like this? How did this happen? Well, this is how it happened. And, that's clearly in the process of changing. And, a lot of people who have been, quote unquote, running the world for the last 500 years are getting their ox gored now, and they don't like it. But they still think that they have enough control over the levers of power to, extend and pretend long enough until they can get the wrong people off the stage, get the right people back into control, and then basically keep doing the thing. But when you look at what's happening in the Sahel region of sub-Saharan Africa to France, France is losing what's left of its empire. If you look at what's happening in the Middle East, the United States acting on behalf of the remnants of the old British Empire, which is what we've been doing, we're now in a position of having to say, put up or shut up over this, over what's going on over there. And notice how the Israelis, after breathing fire for the first 2 weeks about wiping every Palestinian off the planet are now talking about, well, if they turn over everybody from Hamas, we won't attack. That's another way of saying we're not ready to go in and root them all out. And Joe Biden is been told that's enough of that. And again, it maps again to the fact that Joe Biden maps to Davos and the old European colonialists, continental European colonialists, as opposed to as a classic, Atlanticist U.S. UK neocon. Those are fundamentally different groups of people now. They are absolutely fighting over the control of Europe, and that control has been going on for years, and it reached a breaking point with Brexit, and they've been furiously trying to reverse Brexit since then. And part of what's happening with the Israeli-Palestinian conflict is downstream of that. They're still fighting amongst themselves over this stuff. Who's going to control Europe afterwards? Will it be the Brits or will it be continental Europe, centered around Germany? Well, and then there's the Italians who want none of this, who want to be part of neither of these regimes, certainly under George Maloney, but are trapped between the rock and the hard place of having to choose. Their ally is not strong enough to stand up to either of these forces, so you have to choose either the Americans or the Europeans. And clearly, the Europeans are far worse for Italy than America is, especially since Italy has more American military bases than any other country in Europe. Oh, by the way. So Maloney has to make the choice every once in a while that's unpopular with people who who fancy themselves, anti-American, imperialists or whatever you want to call them. I have to argue this with my people in my own community. I was literally arguing with one of them, like right before we hit record. I'm like, you have to look at Maloney from Italy's perspective and understand Italy's problem, which is that they need desperately to get out of the euro. They need desperately to get out of the eurozone and the European Union. But how do you do that? As one of the tripods, one of the legs of the tripods in which the entire EU rests, and the whole globalist project depends upon the European Union being able to set the regulatory basis for the rest of the world to trade. Like, that's what their goal is. How do you do that? Oh, and by the way, if Italy were to leave, the European Union, they would take their 3,000 or 2,500 tons of gold with them, leaving the rump EU with even less collateral to maintain the fiction that their debt should trade at a positive yield spread to American debt. This is insane. All of it's insane. So, I don't know.
Here's another question.
Mhm.
As Powell raises these rates, stays higher for longer, I mean, that's going to put a lot of pressure on the stock market to
Mhm.
come on down. I mean, the growth stocks are priced by, through the 10-year yields.
Right.
Is there anything that's going to reverse this thing? Is Powell going to have to reverse for some reason, a recession, a
Sure.
crash? We got the inverted yield curve that's kind of coming down. What's your take on that portion of it?
Well, let me put it this way. If we had talked in June, I said the yield curve is going to uninvert, you would have called me crazy. When I had Danielle DiMartino Booth on my podcast and I asked her about this, she said, no, the 210 spreads at negative 110 basis points, Tom. In this environment, there's no way the yield curve can invert. And I said, I'm not completely convinced of that, Danielle. It all depends on how investors begin to view the value of these bonds, right? But again, today the 210 spreads at negative 18 basis points or 15 or whatever it is. It was like negative 16 yesterday. And I don't know what it's doing right now. During markets are open right now, so the yield curve's moved a couple of basis points, but it's less than 20. As a matter of fact, 2 weeks ago it was 45. So as much as Yellen has been trying to manipulate the 210 spread to keep it as wide as possible for as long as possible in order to help her friend Christine Lagarde keep German markets under control, which then keep Dutch, French, Italian, and everybody else's markets under control, she has failed because the long end of the curve is now rising, and we've got near normalization. And so now the question is the following. Again, going back to the Mark Armstrong idea of a push from sovereign debt and debt in general to tangible assets. Well, over the weekend, I went and looked at what happened last week. All the stock markets, major stock indices were all off. Except here's the thing. If you want to know if there's an incipient capital flight coming out of Europe, right? Regardless of what Lagarde's doing, manipulating the US Treasury market, and by extension then the German Bund market. The Dow was off 1.6% last week. Let me pull this up real quick. I think I have it right here. Yeah, I do. Hold on for just a second. Where is it? It's not, that's the wrong PowerPoint. I just want to get the numbers right because I actually did this yesterday, right? So just bear with for 1 second while I open up my PowerPoint from yesterday, right? Because I literally went over all this and then I noted the following. The Dow was down 1.6%. The German DAX was off 2.56%. The NASDAQ was off 3.16%. The Euro Stoxx 50, 2.96%, 6.69%. And the Nikkei 225, 3.27%. The Dow is a proxy for international capital flow into the United States, right? If you're an international investor, if you're a foreign, family office or fund manager or whatever, and you're trying to move money around and you're worried about what's happening in Europe, well, you don't plow into the NASDAQ stocks because most of them don't have any yield and they all trade at ridiculous beta. You just want a return of your money and a place to park your money as opposed to the return on your money. So the Dow is basically the 30 most liquid stocks imaginable in the world that can soak up that liquidity without moving price very much, right? Because, hey man, I just want to get my money back at some point. I don't want to move price very much. If I got to move $1 billion around, I can just dump it into the Dow. The S&P 500 is more of a domestic index where Americans buy the S&P in order to invest in America. Just like the Nikkei 225, just like the German DAX, just like the FTSE 100 or the French CAC 40 or whatever, right? The Euro Stoxx 50 is supposed to be that Dow for Europe, and yet it's fallen harder than the Dow has. So while stocks are all under pressure because we're finally beginning to get a global margin call against everything, and the dollar is beginning to eat everything, or as my friend Brent Johnson would put it, drink everybody's milkshake, then I'm not surprised to see the Dow down, but down less than everything else. Moreover, from a technical perspective, if you just look at the weekly chart of the Dow hasn't violated any recent lows, meaning it's just kind of treading water between 32.8 on the low end and 34.7 on the high end. It's dipped below that in March, false move down, and it broke out above that, false move up in July. And every time, and so that band of price on the Dow has acted like a magnet for traders. It gets too expensive, the Dow gets too expensive, people sell it, use it as a piggy bank to raise dollars. It gets too cheap, people sink money into it because it's a great way to, protect yourself against other assets collapsing. And it's acting exactly the way it's supposed to under these circumstances. So that thesis, long held by Martin Armstrong, is coming correct. And all I'm doing is like putting some finer points on it, right? It's playing out. Marty convinced me of the argument. I'm relaying it to you. So when you look at it from that perspective, and then you start really thinking about why Powell's raising rates, and you say to yourself, well, he knows he can't tame inflation of the type and kind that we have with interest rates. He has to be raising for a different reason. And that reason, get rid of the Fed put, get rid of the idea that the Fed will always be there to bail out the stock market, bail out the banks or whatever. The Fed is there and operates, for the most part, to serve the New York banking cartel. That's who owns the Fed. That's the primary shareholders of the New York Fed, right? So don't think that the Fed is not going to defend US banks. That's its literal freaking charter. Don't get angry if the Fed does it. That's what the Fed's supposed to do. You can argue that the Fed shouldn't exist. Different discussion for a different day. I would be happy to have that discussion with you. Gold, goats, and guns, old Austro-libertarian over here. I don't like central banking one whit. Not one erg of my being likes central banking. But that's the world we live in, not the world we want to live in. Talk to me when we're at that point where we can get rid of the Fed. We're not anywhere close to that. The Fed is the best asset we have to preserve the United States, which is also the best chance we have as a species to get rid of colonialism and to get rid of old feudalist thinking. Because it was founded on anti-feudal, anti-colonialist ideals. We've been subsumed into becoming a colonialist power, but that can be reversed because de jure, that's not what we're built on. We're built on federalism. Now, will we survive that? Hey, that's an open-ended question. I'm not going to like blow smoke up anybody's ass here and tell them that their hair is on fire. No, obviously, we don't know what's going to happen. We are at a terminal. We are at an inflection point, potentially terminal inflection point, politically, socially, legally, economically, financially, you name it. We're there. But that's when systems also reform themselves, is when they reach that crisis point. They don't just keep going gently into that bad night. That's when people recoil in horror at where we're going and say, you know what? No. And this is why I have a fundamental problem with other people and, other commentators in the space who just assume that what came before is what's going to happen next, that the past is always prologue. The past is not necessarily prologue to anything because you've not divested yourself intellectually of all single variable Malthusian thinking that what happened yesterday, if you just, push the variable number all the way to the right, that we're going to get this, right? Like the other day, Lynn Alden puts up a tweet. Again, I like Lynn Alden. I have a lot of respect for her analysis. But she puts up a tweet the other day and says, the RRP facility, the reverse repo facility, is falling at some incredible rate. At this rate, it'll be empty by January. Why do you assume it's going to be empty by January? As the closer we get to the day when that thing reaches zero, we may reach different conditions. We don't know that. It's a nice observation. I'm not saying she's wrong. I'm not saying that in 4 months we aren't going to be staring at an RRP facility balance of zero. And then we have to see what the liquidity in the domestic banking industry is going to look like at that moment, because the piggy bank will have been emptied. But there's no guarantee we're going to get there. And what happens if it goes down to 450 billion and it stops? And Powell raises to 6%, it doesn't go back up, or it doesn't fall any further, or whatever, or the change in slope slows down. There's a cyclical pattern to everything. The law of diminishing marginal utility states that that's what governs all of our behavior, all of it. But you can't get through to people. I remember arguing with Steve St. Angelo over the SRS Rocco report, and I said, dude, I don't believe in peak oil because I believe in the law of diminishing marginal utility. And he just literally told me I was wrong. I'm like, people who believe in that law don't understand economics. I'm like, no, you're wrong. And your entire website is built on a fucking lie. And I'm done listening to you. Like, you're an idiot, because that's not human history. Human history is, when we run out of something, if it's priced properly, then we build the investment curve to find the replacement technology. And anybody who doesn't believe this is literally just talking their book because they've lost the frickin' thread. And it's doing everybody in the commentary space a disservice to think in those terms. I'm not saying that I'm right, that this particular variable or that particular thing is not going to go to zero. What I'm saying is you have to be open to the idea that there's always a reaction to everything that happens in capital markets or in your own life or whatever. People respond to incentives. And if you don't believe that people respond to incentives, then clearly you just think that we're all living in a simulation and we were programmed, and we're just bots running, disembodied bots running around, shouting into the void. And I can ask the question is, do you believe in the spoon or not? And is that air you think you're breathing? Because there's a lot of oil out there, and we can mine oil for another 50 years. And if we fix what's happening today and unlock the investment potential of the world, right? Get all of these toll booth operators who think that we, at the WEF and Congress and all the rest of it, we get rid of those people and just bring back rational pricing and risk assessment and put that back as a market function, which is exactly what Jerome Powell is trying to do. Then the investment curve for new technologies, not boondoggles like wind, solar, and EVs and all the rest of the rotten nonsense, all of that will go away and real technologies will come over. And if you look carefully at what's happening in the car industry, manufacturers like Toyota are telling you what's going to happen. They're telling you that we're not going to electric vehicles. We're going to alternative fuel sources, variations on oil economy, and variations on the internal combustion engine.
You're talking about ammonium?
What's that?
Ammonium? Is that what they're doing?
Yeah, well, they want to do the ammonia thing or whatever. It's certainly better than hydrogen, which is, in engineering terms, pushing a dead whale up a beach. Again, I hate to remind everybody, but I have a degree in chemistry, and I did high energy physics as an undergraduate, and electrochemistry and material science and all of this stuff. I spent 30 years doing this. Like, I studied all the, I've forgotten more about physics than most people ever learn. So sorry, I just don't buy it. And I've never bought any of this stuff. The global warming thing is complete scam. And we could get rid of Cap A standards, for example, tomorrow, right? Get rid of them. Emission standards, Cap A standards, get rid of all that stuff tomorrow. And we could be back to having, little tiny Toyota Tacomas and Nissan hardbodies running around with 6-speed manual transmissions and a little 2.4-liter engine, 3,000-pound cars, 3,000-pound trucks for rural America, and we could move hay, sell goats, raise cows, all the rest of it, and live really nice lives, as opposed to having to spend $45,000 on a twin turbocharged Tacoma that is going to last literally 80,000 miles before the turbochargers blow out, no matter how well engineered they are. It's not going to happen. Like, it's just not. So the rant is all about that stuff. Like, and that's why the cost of commodity curves are all the way they are. They're all been pushed so far from real equilibrium. We don't even know what the world would look like if we just got rid of all the. We have no idea what it would look like. But I can tell you that it'd be a hell of a lot better than we currently have, because we would use capital more efficiently.
I mean, is that what you think is going to occur? The rates are going to go up, and then you're going to see a big rotation into hard assets, and all that the financial assets will literally reconfigure back into hard assets?
I think that's where we have to go. If not forever, but it's got to be we have to transition from a central bank of maximal corruption, a monetary system of maximal corruption, to a more rational one, right? Again, riffing off of ideas, put forth by other people, we have a Fed that, just imagine going back to the original conception of the Fed as setting 12 regional interest rates, managing the banking system regionally, and allowing internal competition for capital within the United States. Wouldn't that be nice? That means that Mississippi wouldn't permanently be an underachiever and California would consistently be an overachiever. Who benefits from that system? All the people that we hate. The military industrial complex, the big tech in Silicon Valley. And if you didn't think that was part of a plan, well, you're out of your mind. Of course, it was a plan. They talked about what the plan was going to be. They executed the plan. They don't lie, these people. They tell you exactly what they're going to do, and then they do it. But we can get back to that. They're scared to death that we ever figure out that we don't need them for any of this stuff. And that with SOFR, do we really need to have a Fed funds rate? When you really start to think about, I want to blow your mind, really start to think about the potential implications of a regionalized SOFR market. Because of regional demands for money within the United States. Do we need a Fed funds rate at that point? No, we don't. But are we anywhere near that? Of course not. The Bitcoin maxis all tell me that that's nonsense and, it doesn't matter. Bitcoin's going to win. I'm like, oh, yeah, really? You watch. Bitcoin's never operated when the Fed actually decided to not be committing ritualistic suicide. I love Bitcoin, but I want to see it. I want to see it outcompete the Fed when the Fed is willing to compete for a place at the table, as opposed to literally trying to kill itself in service of, transferring its power to the IMF and the ECB, which is what they were doing under Bernanke and
Mhm. Well, I mean, that's all the questions that I had at least written
Yellen.
down or anything. But is there anything else you'd like to share? Anything else that you may
I
want to
mean,
share with the viewers?
sure. I mean, uh, my people have heard me rant about this stuff 1,000 times. We have such an opportunity here to really blow the lid off of all of these financial narratives, all of these political narratives, all of this stuff, to really reach the people and say, look, we can fix these problems. These are not unfixable problems. These are problems that have been put in place by people who are continually trying to tell you that they aren't fixable. Why are they not fixable? Like they're doing that because they want to crash the system and replace it with something worse. That's all this is. And once you see that, then you say, well, no, we'll just stop doing what they want us to do. And then all of a sudden, like the whole thing just starts to collapse. Because in 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 free energy terms, in real terms, right? Loss due to friction is the way everything fails, right? You build a car, if you don't lubricate the car, eventually you eventually eat the bearings on, and then it sludges up the oil, and then the car just stops because you throw a rod. If you don't lubricate the car, the friction gets such that you destroy the engine. Car stops. Well, you don't show up every day and give them your best. This is the old John Galt argument. Guess what? Eventually, the friction from having to try and motivate you to put your best out there, as opposed to keeping you on the hamster wheel and forcing you to constantly run faster for yourself. They really do believe that they can keep you in that mode of, I have to keep running faster in order to survive. Yes, you do, as long as you allow them to set the terms of how you procure and accumulate capital. If you do it in such a way that you don't need them, I don't need to get my meat from the supermarket. I don't need to, or however, however that works. Why do you think there's always this push for centralization of things like phone service, refining fuels, transportation, road construction, this, that, all of these things? Governments are always constantly trying to get control of those things, because then it's easier to control you. What if we just keep? What if we go back to fixing the roads ourselves? What if we, don't? What if we don't vote for, you know, big power companies run by the state governments? What if we say, you know what? No, we're going to sell in Pennsylvania. No, we are going to sell alcohol outside the state store system, and stop putting the money into the coffers of, for example, these are just little ideas, right? Those are all moments of friction, which they have to then turn around and enforce with more money that they don't have. And you take away their profit margins on this shit, eventually the whole system just collapses. And then you wind up with more enforcers than there are people working, and then the system really collapses. And if you don't believe that's what's going on, then I ask you to talk to any Russian who lived through the end of the Soviet Union, because they all say the same thing. We pretend to work and they pretend to pay us. And eventually one day everybody just said, you know what, let's stop pretending. So why don't we stop pretending that these people matter? Because they don't. And you're seeing it in the geopolitical realm. You're seeing it every day when the polls come out, and more people are like, you know what? Don't want to go to war for Israel. Sorry, don't want to go to war for Ukraine. You ain't having my daughter. You ain't having my son. We ain't doing it. We ain't doing it. We ain't doing it. And then eventually, because they govern it, they keep trying to tell us that they govern because they get to govern, and we trying to rob us of the reality of the agency that they govern at our pleasure, even if they take our right to vote away from us, which they've pretty much done all the way across the West, by making a mockery of the concept of having representative government. So when they're just being nakedly tyrannical, that's the easiest world in the world. That's the easiest thing in the world for us to say no to. So again, I keep it like, using the matrix as the metaphor here, freeing your mind, like rethinking the way this stuff works. You know, you might actually learn, you might just like realize that we're really far closer to the quote unquote revolution, which they absolutely will not televise, than we ever thought we were. So, keep hoping for, the way I look at it is I just keep watching for specific fights and in politically important arenas, and then see how those conflicts emerge, how they resolve themselves, and then decide, who won that round and who didn't, who took the pawn, and who forced the other guy to choose between losing a rook and a bishop. The Russians just forced the neocons to choose between a rook, Ukraine, and a bishop, Israel. Big win. It may be a big win for humanity in the end. We'll see.
And if somebody wants to follow you, how do they do so?
They do so by going to my blog over at tomluongo.me or goldgoatsandguns.com. You can also follow me on Twitter at TFL1728, which is, I guarantee, an even worse version of me will show up every day than you just saw here. And then lastly, you can support the work directly over Patreon at patreon.com/goldgoatsandguns. We do a monthly retail investor focused newsletter, and I do twice weekly what I call market reports, which are a mix of technical analysis and the rants like this on particular topics that are germane to the day, and private blog posts as well. So,
Yeah, well, that's all we've got. All right. Thanks for coming on, Tom. Really appreciate it. And catch everyone else later.